Good evening to all our mentorship traders. We are on a Friday evening session. This is the 5th of March 2021, 9 p.m. Indian Standard Time. As always, Friday evening is our mentorship invest session. We'll talk about the index, how it fared this week, and what can we expect going forward, a couple of sectoral indices, and then move on to talk about which are the stocks and sectors we can focus from a medium to long-term perspective. So it was quite a volatile week for the Nifty. I have the daily and the 75 minutes charts combination. I will zoom out the daily. Now we are beautifully trading within this rising red channel, especially the lower border of this channel seems to be a little more stronger than the upper border. Now, if we zoom into the behavior of prices this week, this was Monday, which was an inside bar, a bullish Harami pattern, follow-through movement on Tuesday, and a beautiful gap-up movement on Wednesday to reclaim back the 15K mark and post a very confident close. And it seemed like it was a sucker rally, completely giving away on the very next day, which is Thursday and then Friday. Thursday and Friday, that's yesterday and today, if you zoom in closely, you'll find that there's decent amount of upper and lower shadows, especially today. Relatively smaller body, longer lower shadow, longer upper shadow, clearly suggests intraday volatility. We have experienced this. If you're a short-term trader and you've been trading the markets, you would have definitely felt the heat. I hope that you've not got whipsawed badly, but that's the kind of markets that we are dealing with right now. Now, if you look closely over the last 5 to 6, 7 candlesticks, you will notice that the markets have got this uncanny nature behavior recently to, I would say, misbehave or turn around. If you see the breakdown that we saw on the 26th of Feb, which was a beautiful long red candle breaking below previous lows, it's definitely a clear sign of weakness, and it never followed through, and it led to a big move, and that also never followed through. What I'm trying to mean is what looks very apparent in the market nowadays doesn't work out, or it is not working out. Having said all of these things, the underlying trend of the index is very much up. If we look at our 1334 exponential moving average, or we look at the RSI 9, it all suggests that we are still in an uptrend, and strategically we should continue to be biased on the long side. Levels to watch for, of course, we have the previous swing lows, which is close to that 14,600, 750 range. If you take a look at the 75 minutes chart, I have a nice cluster of volumes happening over here at 14,800. So I think 14,800, 14,600, 750 zone, there's multiple supports which will hold the index, or will try to hold the index for the upside. Strategically, I still feel, and I would suggest that one should keep one's bias on the long side for the next week, unless proven dramatically and drastically wrong. We generally do a top-down approach and look at the higher time frames. This is the weekly chart of the Nifty, which had given a wonderful breakout, and it's just holding there. It's holding okay. There is a divergence, but these kind of divergences are very rare to work out that well. What I feel on an honest basis is that maybe we are heading towards a consolidation. 15,250, 300 on the upside, 14,500 on the downside. We're probably heading for some amount of consolidation. Now, it's the pocket of the market which matters a lot in terms of weightage that created most of the sell-off over the last 2 days. I'm talking about the banks, the public sector banks, the bank Nifty. This is the daily chart of bank Nifty, and if you closely look at it, the lows of today's trade is very close to the erstwhile swing lows. So it's the bank Nifty and the banks or the banking stocks which have led to this fall. And if you notice, if I shift this to a line chart, we can clearly see in the line chart series of lower highs. This is not a very good sign if you if you read or if you follow classical technical analysis, this is not actually a very good sign for the Bank Nifty. Whether it will break down, if it does, this is the weekly chart. So if we have a breakdown of these lows, which is close to that 34,600, 620 level, we definitely are looking for at least a 50% correction of this big, huge rally week that we had. So this is close to that 33,300, 500 kind of level. So break below this lows, you can expect easily some amount of correction for the Bank Nifty, and that can definitely lead the index to drop down further. PSU Banks was the biggest loser in today's trade. It's down close to just 4%. State Bank of India was badly hurt. Bank Nifty was the other loser. If I sort in terms of percentage losers today, it was led by PSU Bank, Bank Nifty, and then metal. Metals are in a very strong uptrend. We have a beautiful divergence over here, which is leading to this fall. But considering the strength of the index and few stocks, it will definitely find some buying at lower levels. And then we have the private sector bank. So I think all eyes should be there on the private sector banks, public sector banks, the Bank Nifty, the 12 stocks. These are the 12 stocks that make up the Bank Nifty. We should be keeping a very close watch on these. Short-term bounce backs will be there, but it will be very important to see whether these bounce backs hold or not. To get a much better view, clearer understanding about the sectors, let me take you to the stockcharts.com page, wherein on the dashboard I have opened the RRG charts, the sectoral rotational graphs, and let me first look at the weekly performance. So I have dragged it to 1 week. Of course, it was a positive week for the markets and most of the sectors, except the PSU banks. Majority of the damage came in today. All the sectors were positive, led by media. Z gave a big move, and followed by commodities, small caps. We've got the IT picking up, which is a good thing. Auto, mid caps, etc. But what I'm more interested to check is in terms of the tails on a 3-month perspective. So I'm going to increase the tails to around 12 to 13 weeks. There you go. I'm going to fit it. It looks clean. And if you look at the indices, the sectoral indices, which are in a positive quadrant, you have the PSU bank. Now it has gained significant amount of relative strength as well as momentum, which is kind of slowing down now. It's up 28% over the last 3 months. It's, I think, one of the biggest gainer thanks to the stupendous move that came in from State Bank of India. So this guy is due for some slowdown. Then we have the real estate. You can see the graph coming down very clearly. This is the drop in momentum, not relative strength. So one can look to buy on dips in the real estate unless it goes to the weakening or the lagging going forward. Same story you'll find in the other sectors. This is a small cap. Now, if you've been following my work on these weekly videos, many a times I've mentioned that a weakening sector does not necessarily mean that it has to fall and go to lagging. It will eventually go to lagging for sure. It will eventually go to improving and back to leading. That's the natural flow clockwise. But it can yo-yo. It can oscillate between weakening, leading, leading, weakening, and so on and so forth. Small caps are picking up. So are the mid caps. PAC, that is the public sector stocks, now are inching towards leading. This can be very interesting. This can be very interesting. I would request you to take a look at the constituents of the PAC, that is the public sector stocks, and check that which are the ones which can give you a big breakout. We have the auto. You can see here how smartly the sector from weakening just touched a bit of lagging, never actually went towards improving, and then now is leading the space. These are the sectors. The green ones are the ones that one can look to buy on a dip. They're still in a strong quadrant. Energy has picked up, and CPAC, the public sectors as we spoke of. Energy now from a lagging has gone into improving. We've seen some good movement coming in stocks like IGL, MGL, OMCs also, and of course Reliance Industries. Will be a very interesting space, because if the Nifty If the Nifty manages to find some degree of support, if let's say it comes down and finds some degree of support, I'm just contemplating. And whenever it finds support, maybe at this price, maybe 200 points lower, maybe 1000 points lower, I don't know. But the next leg of movement, who are the stocks and sectors which are going to lead that move? That's very important for us to anticipate. Energy stocks will be interesting to see, to keep a close eye on, because they have moved into improving, and the public sector stocks. In terms of weakening, metals, though, have shown good strength. The momentum is dropping. Bank Nifty, the momentum is dropping. Private sector banks, we've noticed stocks like HDFC Bank, Kotak Bank, they have come off. Financial stocks also, and so is IT. But what IT has done, if you look at the graph here, it's picking up momentum. Now is the time that it should show some more relative strength. Means it should go to the higher quadrant and go rightwards, which means that now they have not fallen so much recently. They've picked up momentum. Now is the time they should give us a breakout on the upside like Infosys did. Okay, last but not the least, the ones which are in the lagging. Pharma is in the lagging and dropping momentum. Not a good sign. I would suggest stay away from it. Fmcg, this is a little spoil sport, because it was in the improving few weeks back and it was gaining momentum and strength. Remember, I've been talking about this kind of a sign is really good, and FMCG can play a role towards the leading, but sadly, no, it decides to come down, lose momentum, lose relative strength, and probably will stay here and then pick up again. So this is a sad story here. Same with consumption also. Both of them did the same thing. I think they will pick up, but not this time. Maybe after a few weeks. Anyways, we're going to track this very closely. So pharma, I would suggest to stay away from. FMCG and consumption can correct a little bit more, maybe stay a little soft for next few weeks and then pick up. But interestingly, it's the energy stocks that we should keep a close watch on. It's the public sector stocks that we should keep a close watch on. And the ones which are in the green quadrant, especially real estate, auto, infrastructure, small and mid caps, we can look to buy on dips. Let's keep the positive bias. Let's not immediately go all out bearish. There has not been a trend reversal yet. The key will be the bank Nifty and the banking stocks, because they are in a very precarious situation, close to the supports, and can lead to the breakdown, which can drag the index down. All right. Till then, I would suggest that next week, if you do the trades on the long side, keep them as short-term trades as much as possible. Maybe intraday or 1 day, 2 day maximum. Don't hold on to your long trades for too much right now. Let's see how prices behave. It's been really volatile, difficult for short-term traders, but that's how and what it is. So take care of your trades, bet small sizes so that your risk management is in control, and let's wait for the volatility to pass through. All right, so that's the take on the markets, sectors, and the index. Now everyone, let's discuss about stocks and sectors which are looking interesting from a medium to long-term investment perspective.